Well, good morning, everyone. Thomas Montgomery with IIMFL and Smart Money Alliance. It is a pleasure to visit with you all this morning. It's a beautiful Tuesday morning at 7:59 a.m. Central. We typically get together most weekday mornings with our distribution partners at 8 o'clock or a minute or so before. We had a really good training yesterday. If you missed that, make sure you have a chance to listen to the recording. And we also mentioned that we are appointing new board members to the nonprofit board, and we'll have our next board meeting on Friday. So be sure to let us know if you're interested in being in a leadership role. No cost to be a board member, no compensation to be a board member. But with that being said, we have a really important topic today, and this is going to be relevant regardless if you're an affiliate partner or a white label partner. We're going to talk about key person policies. You might have heard reference to that. Maybe it's something that's of interest to you. Maybe you're ignorant of it, but I want to give you a high level review, and then we'll answer questions, and you'll put in your questions via the Q&A. This is important because it's a huge stream of income to you that you may be leaving on the table. But furthermore, it's also an area that can receive some scrutiny. So if you understand how it works, we can avoid or address any scrutiny that may come about. So let's go through it. And then as you have questions or concerns or thoughts, put it into the Q&A box there in Zoom. All right, so again, our topic is straightforward. Key person policies. What are they? Why they're needed, and how to monetize. Okay, why is it important? Well, the relevance of key person policies isn't that we were just sitting around at the conference room table and said, wouldn't this be a nice pitch to offer people? It's not. In fact, it's part of the SOP, standard operating procedures of the SBA. So first, with a disclaimer, different sources of capital, we've talked about this many times, different sources of capital have different underwriting requirements. Some require a key person policy. That bullet there is true, and you could insert anything. Some require a business plan. Some require a personal financial statement. Some require tax returns. Some require good business credit. Some require good personal credit. You and I know different sources of capital have different underwriting criteria. There's no single set of criteria that applies to all sources of capital. It's not one size fits all. Okay, so now let's move into the meat. So the standard operating procedure, which I included, I don't even know how to say this, quite frankly, SOP 50 10 5 H. And actually, I have it pulled up. I can share it with you here in a minute if you want, but you can Google that and you can pull up the actual standard operating procedure. This is the operating procedure for SBA lenders. It tells them this is what you must have to be able to offer an SBA loan. So this is not written to your benefit or to my benefit, to the client's benefit or the client's detriment. This is the SOP, the guidelines, the policies for SBA lenders. It's the real deal. So it requires a key man, or to be more gender neutral, a key person policy. Why? If this is foreign to you, you might say, well, why would insurance be required for a business to get funding? That doesn't make sense. Well, think about it. So the lender is extending money to the borrower with the hope, the expectation that the borrower will repay it. They've gone through whatever underwriting criteria to decide if they think the borrower is worthy, is not too risky to receive the loan. So that's already happened. But what's the one thing that the lender can't control? That the borrower should die. Because in a small business, what happens typically when the key person, the person in charge, the owner, dies? Well, it's usually haphazard, right? Is there someone else that's going to take over the business? Or are they going to just close the business? Whomever takes over, do they know what they're doing? Is it going to be as successful as it was before? It's not like when Steve Jobs passed away from Apple and there was someone else, Tim Cook, I believe, that able to step into that role. I mean, we're not talking about funding for Fortune 500 companies. Smaller businesses are often very volatile if the key person, the owner, the founder, is gone suddenly. And so it makes sense, right? This is protecting the lender in case the key person were to die. And so now this is an exact quote, and you can hold me to it word for word. I cut and paste from the standard operating procedure. I didn't add any words or delete any words. It says, if the loan is not fully secured, and I'll describe what that means in a moment, life insurance is required for the principals of sole proprietorship, single member LLCs, or for businesses otherwise dependent on one owner's active participation. So when we talk about fully secured, let's say that you and I are helping a client. Well, real estate's hot right now. And I can tell you that it's a great market to get owner financing. We've had 3 conversations in the past week of sellers willing to do owner financing with some great terms. So real estate is great right now. So the point is, if we were to help a client buy $1 million building, and if the building in fact is worth, the appraisal amount is worth $1 million, it's going to be pledged as collateral, right? Because if the person, separate from death, if the borrower were to not pay the loan payment back, the lender is going to foreclose on the building, right? That's the way it would normally work. Well, in that case, I don't know that a key person policy would be as relevant, but what you and I know is a lot of clients need working capital. They need funding for soft uses that's not attached to something that could be repossessed, like equipment or real estate, for example. So for most clients, having a key person policy would make sense, because frankly, not many of our clients are getting 100% collateralized loans. Okay, so I want to stop here for a moment. And does anyone have any questions on the first of the 3 segments we're talking about today, which is, why is a key person policy important? Why is it relevant? Why is it real? It's not us making something up. We had a client, and I'll be transparent with you. We had a client who was dissatisfied with us. He's in Georgia, and really not for a good reason, but regardless, dissatisfied with us. And so he went and complained to the state of Georgia Department of Insurance, and then we're in Texas, the Department of Insurance in Texas, complains, oh, this key person policy thing is a racket. You know what happened? Dismissed. And it never became official, but it was just an investigation, because this is fact, right? This is truth. If someone feels that the SBA shouldn't require insurance, then I guess become a congressman or a senator. I don't know how you change SBA standard operating procedures, but that's way above my pay grade or your pay grade. So this is the real deal. Offering key person policies as part of a loan package is as natural as it is to have a business plan in a loan package or to have financial projections. Okay, anyone have questions on what we've covered so far? We have more to go through. Any questions so far? Okay, let's roll on down to bullet 2 then. What is it? So if you are insurance licensed, you probably will want to get set up to offer clients key person policies. If you're not insurance licensed, you probably will want to work collaboratively with someone that is insurance licensed, because what you and I do together as technical advisors is we help build financial literacy and build loan packages to help people get funding. So this is a valuable part of that. And so again, if you're licensed, we need to get you set up however you want. You can write through whatever carrier you want, or we can provide you access. But the bottom line is, if you're licensed, we need to get you up and ready and start writing policies. If you're not licensed, then it would make sense to work with someone that is. Okay, so what is it? So when life insurance is required, key person policy, there's typically not a particular type. So it could be term, it could be whole, it could be an index universal life. There's typically not going to be a requirement of a certain type of policy. With that being said, though, the policy must be maintained during the term of the loan. So let's say we get a 20-year SBA loan. Guess what? The term of the insurance policy should be at least 20 years, right? If it's only 10 years, we'd have a problem because the insurance would expire before the loan's paid back. And who knows if that person would qualify again at that point. Speaking of that, not on the screen, there's workarounds when someone cannot get approved. For instance, our business went through, we got an SBA loan. I'm a cancer survivor. Guess what? I'm not very insurable. But with that being said, we were still able to get the SBA loan. So don't overreact in terms of having someone that is uninsurable. There's a workaround for that. We can help you with it. That's legal and ethical, nothing great. Okay, so also, lenders typically prefer annualized premiums. They want the borrower to pay the premium annual upfront and then annual thereafter. And that's not unusual in business insurance policies. Like we currently lease this space. And so our landlord, the chamber, requires us to have a liability policy. But the liability policy is paid annually, not paid monthly. So that's kind of the norm for business policies. That's also good for you as an agent because now you're not chasing after someone that skipped a payment. You don't have to worry about chargebacks or what have you. So lenders typically prefer annualized premium payments versus monthly or quarterly or semi-annually. Could there be an exception? There could be, but we need to make sure that we're getting this client enough liquidity that they can afford this. And so that can come through FTF, first tranche financing, or other rounds of funding leading up to the larger loan. So that won't be a problem. The lender is not the beneficiary. So for those of you that are not licensed, let's talk about key roles within a policy. So you have the policy owner. Who owns the policy? Typically for a key person policy, it's going to be the business. The business owns the policy. Secondly, there is the beneficiary. Who receives the funds in case of a payout? Typically, the business is the beneficiary as well as the owner. The insured, of course, is the key person, the individual. Typically, anyone that owns 20% or more of a business should also have a key person policy that would be set up the same way. So if we have a policy owner, an insured, and a beneficiary, and I never named the lender, then where do they come in? Well, it's called a collateral assignment that gives them first right of payout, but only to the amount that they have exposure on. And then everything else goes to the beneficiary. Notice we are not part of that policy. We're not the beneficiary. We're not the collateral assignment. And so if you think that, you're wrong. We've never have been one of those roles. That would become fuzzy or gray, but that's not the way we operate. And if you're writing these policies, you would be the agent, but you would not be the guarantor. You would not be the beneficiary. You wouldn't be any of those roles either. So arm's length, stay compliant. The amount of the life insurance will never be more than the original amount of the loan. And in some cases, it could be less depending upon the value of other collateral. Now, I will tell you that if you're a licensed insurance agent, you're working with suitability. And so you may see that there's other needs for insurance. So maybe that key person policy needs to be more than what the loan amount is expected to be because they have other obligations. That's fine. But from the perspective of the key person policy, they would never ask for a policy amount more than the exposure that they have through the collateral assignment. And then this was a big one, how you, assuming you're licensed, how you write the policy will have a great impact on how long it takes for the policy to be written. If you do a fully insured where there's fluids involved, which means, they collect blood, maybe urine, that's going to have a more lengthy underwriting process than what we typically use, which is a non-med policy. You or whomever you're working with is the agent. You need to decide what's best, what the client's suitable for and what works for you. We're not going to dictate that. But if you were to ask me my opinion, this is my opinion. I would recommend doing a simplified underwriting policy, maybe like what we do, a guaranteed issue for the key person policy. Then work with the client, see what other asset protection needs they have, business or personal related, and then get them the right coverage. And maybe they could benefit from an index universal life or an annuity, whatever else they need. But if you were to ask me my opinion, which is not the rule or what's being dictated, I would do a simplified or a guaranteed issue policy to get it quickly issued, because that prevents delaying the process of getting the loan package built. But again, that is up to you. Okay, so again, we're going to pause. Now we're through the first two bullets of the three. We've covered why are key person policies important, and then we've dove in to take a deeper dive to understand what the policy is and how it's set up. Who has questions? Because, this should be significant. This is a need. It's a valid, credible need. It's a door opener to be able to talk to people about insurance, and we'll talk about in a moment how to monetize it. But I look at some of you, and you take Mark, and Mark had, what have you had, Mark? 36 enrollments in the past 30 days. You've enrolled like 36 new clients, Mark. You should be writing 36, assuming that number is right, I think it is, 36 key person policies. Mark, the average insurance agent doesn't even write 36 policies in a year, and you have the opportunity to write 36 in a 1 month period. Let's assume that your average commission is $1,000 a piece. You're not getting rich off of it. That's an extra $36,000. So you're helping people build their loan package, be compliant, and you put an extra $36,000 in your pocket, Mark. And for others, Leo, you've had 4 or 5, I think 5 clients this week already, and this is Tuesday morning. 5 new key person policies at $1,000 a piece. That's $5,000. I know you make a lot of money, Leo, but an extra $5,000 for helping a client become more compliant, helping them build their loan package. And it goes on for many of the others of you. Barry, you're hitting home runs. So this is a big deal. This is meeting a need. I know some very successful insurance agents, and this is all they do, unrelated to us. They're not involved with us, but they just work with SBA lenders and write policies to help clients get that part of their loan package put together. Now, you're doing more. You're a technical advisor. You're generating other revenue streams. But I'm saying there's people that make hundreds of thousands of dollars a year just writing key person policies. And I feel like I'm pushing a rope trying to get some of you to realize, damn, man, you need to be doing this, right? So questions, comments, concerns on the second bullet before we get to the third bullet, which is how to monetize. Any questions? Again, if you're life insurance licensed, you can write it wherever you want. If you're not life insurance licensed, then we recommend you partner up with someone that is, and they could provide a valuable role in the process as well. Okay, so let's move on to the third bullet, and then we'll wrap this up. How to monetize. Well, I think we'd all agree. I think it's a fact. It's not an opinion. So maybe it's I know instead of I think, but regardless, most small businesses need or want additional capital to start, grow, and or reach their potential. Therefore, this is a great door opener. Again, the typical life insurance agent, there's a few life insurance, kind of like real estate agents. There's a few life insurance agents that's making a lot of money, but there's a whole lot of others that are not reaching their potential. And so what's missing often? Leads. Well, baby, here's the lead generation. You open the door with access to capital, preferably through the white label model. So you're able to set the client's terms and pricing as you want. And then you can turn around and use that as a discussion of asset protection and insurance. It's legal, it's ethical, it's appropriate, and it's very effective. And I need some of you to take a look in the mirror and make sure that you recognize this, because if you're life insurance licensed, it's crazy. And if you're not life insurance licensed, again, work with some agents who are, and they can become tentacles out into the marketplace and help fill your funnel. It looks like I misspelled label here, didn't I? But as a white label partner, which there's no cost, You can serve as a bona fide technical advisor to help small businesses improve their financial literacy, which is a big part of what we do. And we'll be talking about that at our board meeting on Friday for those of you that are on the board, and building a lender compliant loan package. Helping them create a key person policy is a natural part of this. All right, so I want to take a couple minutes for questions because I've covered what I needed to share with you. I wanted you to understand what a key person policy is, its relevance, its credibility, some discussion of design, and then lastly, how to monetize. So who has any questions before we wrap up today's training on this important topic? Anna Marie, April, Barry, Beatrice, Bernard, Bruce, Chris, Christopher, Joseph, Leo, Mark, Quentin, Samuel, Scott with 1 T, Scott with 2 T's, Will, William, others. Who has, Monique, thank you for joining us today. Haven't heard from you in a while. Who has questions regarding this important topic? So it's another revenue stream to you by helping people build their loan package, which is what we do, regardless if you're an affiliate partner or a white label partner. But obviously, and I misspelled here, but white label partner is where you want to be, because that allows you to set the client's terms, set the client's prices, control the client relationship. Who has questions on why it's important, what it is, or how to monetize? Anyone have any questions for us? All right, well, you're a quiet group today. Oh, here we have a question. Samuel says it's powerful. Yes, yeah, I'll disseminate this for sure. And we keep a YouTube channel where all of these, I believe all the trainings go up on. So you can always go back and listen to the past trainings. So again, thanks everyone. What we want to do is spend short periods of time together on a daily basis, whether you can join us live or recorded, and make sure that we're training and supporting you. And also we want to assist you in being compliant. That is key. We want to be legitimate and honorable and compliant. And so this discussion hopefully helps us all understand why this is legal, appropriate, and how to approach it in a compliant way. Now, ultimately, if you're life insurance licensed, you work with your own hierarchy, and they help with those nuances. We're not your insurance broker or IMO or FMO. But I just want to explain to you how this fits into the big picture and how you should be generating an adult income from this alone. All right. Thanks, everyone. We'll see you back tomorrow morning. Have a great day. It's been my pleasure. Bye-bye.